with the strategy I'm about to show you guys, this is proof that trading doesn't actually have to be that complicated. So let's get into it. What you're gonna want to see is a break of structure, right? That is the first step. You want to see a break of structure, and this has to be a convincing break of structure, right? Not just any break of structure, a convincing break of structure. Then within that break of structure, within that range, you guys want to identify an imbalance. After spotting that imbalance, you want to see price kind of starting to retrace. As price starting to retrace, you want to pull out your fib tool from the high to the low, right? You want to edit your fib tool to cater for the 0.71% level, right? From there, simple, you just put in your position tool from the high to the low of the range and just let price do its thing, right? Now there's an example I could show you guys on a trade that I took. This was a swing trade on Euro USD. This is how it looks like. This is a trade that I took on Monday and I just closed it out today, right? So what did I see? A break of structure, and this was a convincing break of structure, right? Then I was able to identify a fair value gap. Some call it imbalances, right? Then as price started to retrace, I simply drew my fib tool from the high to the low, from the high to the low. Then I dragged it out. After I dragged it out, I just put on my position tool, right? Then I just set and forget. As you can see, I was tapped in and price came back and tapped in, retested the level again, and as you can see, it went back straight to TP. I'm also in another trade right now as we speak on GJ. So I'm looking at this same criteria, right? Convincing break of structure, right? So this is our range. As price start to reverse, you want to draw your fib level. As you can see, I have it drawn over here, 0.71%, and you want to identify your fair value gap, right? Then you just put in your level, then it's done. Trading doesn't have to be complicated, guys.